Well, good evening, everybody. I'm Anuj Mehrotra. I am the Dean for the Scheller College of Business at Georgia Tech here, and I am delighted to welcome you to this special session of Tech Talks Business in collaboration with our conference, AI and the Future of Finance. So thank you all for being here today. And thank you. Let me introduce our special guest today, Andrew Schlossberg, who is the President and CEO of Invesco. Welcome to Georgia Tech.
Yes, thank you. Thank you so much for having me.
So I have so many questions of you right now with whatever is going on, but let me start by asking a little bit about your background on how your careers and how you are here today in your career, and maybe a little bit about Invesco itself.
Yeah, well, I arrived by car, so that's hard.
I practiced that, Joe, by the way.
I didn't, so you set me up for it. Let me start with Invesco, if it's okay. So Invesco, we're neighbors of yours here at Georgia Tech. Our global headquarters is just down the street or up the street. We're an asset manager. We manage around $2 trillion of assets for our clients all around the world. And our clients are big institutions, pension funds, endowment funds, sovereign wealth funds, retirement plans, but they're also individual investors that we serve largely through wealth managers. And we invest in public markets like stocks and bonds, and we digital assets, and we invest in private markets like real estate and private credit. And the company's 100% focused on those ambitions and efforts. So we see markets all over the world, and we have offices in over 25 countries around the world, and we have clients. About 40% of the clients' assets are outside of the U.S., so it's a very global institution. I've been CEO for just a little under 2 years, but I've been at the company for nearly 25 years, and I've been in the industry for about 30 years. So I don't know a lot, but I know a lot about asset management because that's really what I've done for the last 30 years. I'd love to talk about it through the course of today, my career, but one of the things that's kept me at Invesco is a few things, is how global the company is, how collaborative the company is, and how it brings together intellectual curiosity. So all open to talk about through the course of the day, and thank you.
Awesome. So we definitely share that collaboration and how open and curiosity part with Georgia Tech as well. And I want to thank you for the partnership that Invesco has with the Scheller College of Business, and thank you for that partnership. Now, I know you were with several CEOs in Washington, D.C. a few days ago. Mm-hmm. So your information may be dated at this point because I hear everything changes every 2 hours, but would love to hear a little bit, if you could take us into what is the White House thinking right now, and what is going on, and what can we be expecting in terms of the changes that are taking place right now?
Yeah, you set me up for that. I have no idea what White House is thinking, and you're right that all my information is stale by 3 days. But no, we did get a chance to spend some time at the administration. Several business leaders and companies here in the United States. Look, I think there's I won't comment on the political side of it at all, but there was a lot of discussion around tariffs and trade, of course, and there was a lot of encouragement for business to, there was an understanding that the complexity and the volatility that's getting created by this is having an impact on markets. So, I think there was a full acknowledgement of that. I think at the same time, there's a conviction of the administration that what they're doing on trade is going to be useful for the United States, and really looking through short-term market gyrations to really look toward the long run. Now, as a corporate or as an investor, volatility and uncertainty, are things that we don't like. And so what I picked up were some of the things you're probably seeing in the news. One is, I think the corporates are really going to slow down their capital allocation decisions and their capital spending decisions. Private equity is slowing down, M&A is slowing down, and you've seen what's happened in markets. So, that's going to have to work itself through, and I think it's going to have implications for our economy. Everyone saw what the Fed said yesterday, and other central banks are going to consider this. But what I'll say on the positive side from a markets perspective is that while markets don't like uncertainty in the short run, volatility is actually a good thing for investors because it creates opportunity, especially for active managers where they're looking for disconnections. And, we're a big active manager. So I think it's going to create opportunity. Capital markets, as those of you that follow it, have been very narrow. Only a handful of stocks have been performing well. Only the U.S. market has been outperforming. And so this volatility will create a broadening out of investment opportunities.
Well, thank you for that insight. As individual investors, we kind of look at CEOs like you and how you react to certain things to be in a position to make those kind of calls. And there are so many economists who are either on one side or the other side of the impact of whatever the initiatives may be. How do you, as a CEO responsible for a big company like this,
right,
kind of filter through the noise and be able to keep focus on this?
Yeah, I mean, I think any leader really of any business or institution or anything, it's important that you do try to filter out the noise, as you said, and that you take your time. And I think in periods like this, overreacting or quickly reacting can work against you. So I think the first thing is you sort of hunker down on your convictions, your strategy, and your principles. And if you kind of keep true to those, but also be willing to be agile and be willing to change. And so it's this sort of fine line between stick to your principles and adapt and change. I think the other thing, and we always do this as leaders, but I think now doing it even more, is you have to get out of your bubble. You've really got to talk to a lot of people directly, all of your stakeholders, and you've got to kind of hear it yourself, because what you read or what you hear from other people, it's less effective in an environment like this. And then I think you have to practice what I think most good leaders have, which is empathy. So when you're leading a group of employees in a time of uncertainty or clients in a time of uncertainty, really listening, really trying to put yourself in other people's shoes, and then try to use it to solve problems, I think calms things down, usually in a stressful situation.
That's excellent advice. So this conference is about AI and the future of finance. So I'm going to get to that directly now. And, in thinking about the impact on innovation, particularly including AI on the investment landscape, I would love your thoughts on that and how things are evolving there.
Yeah, I mean, it's undeniable that all the things better than me, really, about AI and data science and the impact of artificial intelligence, generative AI. It's all going to have the impacts, I think, that most of you are envisioning and participating in. I'll speak from an investment organization and then more generally. From an investment organization, because our job is to manage other people's assets. It's different than trying to figure out how to sell someone sneakers or, maybe how to figure out the next best sale of a beverage. So the way that we're going to, and we use technology and we use AI is going to be a little more slow and fragile, but the applications really are endless. When data scientists or engineers join a company like Invesco or other asset managers, they're excited about two things, I think, that I know about. One is that we have a ton of data, and two is that it's not as organized as a lot of other industries. And so it's really ripe for these opportunities. And I think the advances in innovation and technology have taken it to another level. I think from a more general perspective, and we can talk more about this if it's interesting to you and the audience, it's not just about the technology, but it's how to get the right use cases and get the right people in business, the business parts of the organization. And I think one of the impediments to actually this expanding through corporate is people, and not from the standpoint of they're against using the technology, but I don't think they know exactly how. We help match it up as well as we can. So we're looking forward to all of you being able to help us do that.
So you mentioned a lot of data, and obviously that is of great interest to our faculty and our students, and I know we work together on many of those things, so that's wonderful. But you have been in asset management for some time, right? You said you have spent a lot of time on that, and you know asset management well because of that. So can you tell a little bit more about what are the top innovation trends in asset management?
Okay. There's a few that I'll mention, and some of them, are in the later innings of it, and some in the current innings of it. I'll start with digital assets because many people here, I'm sure, own some kind of digital coin or digital asset, and that's going to continue to advance. But I think the bigger use case might be tokenization and the ability to take a building like this, and instead of it being owned by one institution, that it could be tokenized and owned by all of us in the room in fractional shares. And that sort of technology and that ability to apply that to investments that have been heretofore private and make them a lot more democratized for everyday investors like us is a pretty powerful thing. And there's a lot of work being done in the asset management industry on how to do that. There's other technologies that are seemingly a little more dated, but only developed in the last 10 or 20 years, and they're advancing even more. Think of things like exchange-traded funds, which have now been around for a while, but as you're able to do things like fractional shares, as you're able to bring active assets into an ETF version, there's a lot of innovation going on in the asset management space around things like ETFs. Those are probably two, that I'd point to.
So you talk about ETF management, so it naturally brings up the QQQ.
Yeah, I've heard of it.
So tell us a little bit about the QQQ and what one of the, it is one of the most effective investment tools, I think. So give us a little bit of a refresher on QQQ for those of us who don't know.
Yeah, it's a 25-year-old ETF. So it was one of the early ETFs. It's around $300 billion in assets that follow it. So it's a really large ETF. And it's a pretty straightforward ETF. It's the 100 largest companies in the NASDAQ index. So it's not just the largest technology companies, but healthcare companies and other affiliated. So it gives people exposure to U.S. growth and technology. And if you think about it over the last 20 or 25 years, those have been pretty good places to be. So the performance has been quite strong. It's a partnership between Invesco and the NASDAQ that we've worked on, and we've expanded it into other indexes and other asset classes, but that's the principal fund. And it's really, we market it, we advertise about it, you see it, we do it here on campus, we partner with you on some things, but it's really given access to millions and millions of shareholders to be able to own in a very visible and transparent way those sorts of companies. So it's been great. And it's about 30-40% of the ETF assets that Invesco oversees. We're a big ETF player, but that really is a cornerstone for us.
Yeah, it's great. So that was helpful. But going back into the AI and how AI is influencing asset management and the decisions, it would be great to hear a little bit about how asset managers are evaluating the investment decisions and opportunities using AI at this point.
Yeah. So I'll break it into maybe three parts. So the investments area, client service or distribution, and then operational areas. And maybe I'll go in reverse order. The biggest applications right now are happening in the operational areas and in distribution areas. And in operational areas, it's all the same efficiencies you could think of. We produce a ton of content, a ton of legal documents, a ton of compliance, and all of that can be aided through the work of AI. And we're applying some of those things today, but there's a lot more opportunity to apply that going forward in places where I'll call just general efficiency. And that will be hugely impactful to companies like ours. In the distribution or client area, right now, we're using it as a tool to help us with things like next best opportunity for the client, or ways to have bots that can sit next to, our human advisors and engage in people that engage with clients and help them in that process, help people find information. So things that are probably some basic use cases at some other companies, they're early days at asset managers and certainly at Invesco too. I think the investment side is the part that's the most interesting, but probably the hardest. And adding to my comment before about the fiduciary role we play, there's a lot of work to do before we unleash that, onto our clients' assets. But it's being used by virtually every one of our investment teams on simple things like digesting earnings calls from CEOs like me and trying to process information and apply it more quickly, to running, basic, modeling into some income statements and balance sheets that can better inform the analysts and the portfolio managers as a side-by-side tool. You wouldn't be surprised to hear that the younger demographic skews higher on using the tools, and the older demographic like me, skews a little lighter, but everybody's using those tools. We're gonna perfect them before we roll them out. The other thing is keeping the data in our house. And so how do we use, things like off-the-shelf tools like ChatGPT, but then building our own mechanisms inside the company? And so these are the sorts of things we're focused on.
Yeah. When I asked you about innovation, you mentioned about potential interest in innovation across industries. I would love to hear your thoughts, particularly around cloud infrastructure and around, automation. How do you see the role of AI?
I mean, look, where would I, start and stop? As I think it almost applies completely across the piece. I'm a little earlier in the stages of that because, as I said, we don't even have all of our data in the cloud, quite yet. I mean, it's all sort of finishing that work. But I see the things that are that the applications that come on those efficiency areas that I was mentioning before, and the use cases don't end. I think one of the biggest challenges, and this is where I was alluding to before, is if you think about how to apply work you're doing, if you're in a corporate today, but if you're not in a corporate today and seeking to get into a corporate, what I was trying to imply before is that the technology and the things we've built are really phenomenal. The use cases that I can come up with my colleagues are very long. Finding the match between the two and applying this to a few places and really getting the whole ecosystem to work together is something I would suggest to everybody to spend, while it sounds really simple, spending a lot of time on as to how these applications actually occur inside corporates. And as I talk to people across every sector, this is not an asset management comment. That's one of the hardest things for corporates to adopt right now.
Well, not just corporates. I think it's true across, and even for us in academia. I mean, thinking about the AI development cycles, which are accelerating. How do you keep up and respond to that, where, the development cycles themselves are accelerating? So how do you accommodate that part into your innovations?
Well, I mean, look, it starts with you have good people on the team, and we really try to hire a diverse set of people, some that come from our industry, and a lot of people that don't come from our industry but come with those expertise. And so we're relying a bit on them to keep us current and keep us present. And then inside places where like product development or the investment portfolio managers who aren't going to be able to stay as current, keeping really close to them and having them define problems. And then when you find those matches together, that's where the opportunity comes. But it's got to be, as the CEO, it's got to be something led from the top, that you set a culture of innovation, faster cycle times, trying and, hopefully not failing all the time, but it's okay to fail. Creating the right incentives and creating the right environment for people to work that way.
So, Andrew, you mentioned you have a global footprint. Are you finding differences on how different parts of the world are adapting AI for investments?
I mean, it's interesting. I think a lot of the same, and I'll just talk about asset management for this because I don't have a broader view on that. I think a lot of the same dynamics that I described exist in virtually every developed and developing market that we're in. And so all the same features and challenges that I described. I think some of the emerging markets or newer markets that don't have, it's like the old phone lines, and then we got onto mobile phones, and places in South America just skipped the phone line and went right to the mobile phone. You can see that in some markets like China, where we have a joint venture. It's a China for China joint venture, or a China for China business, so it's all Chinese investors and Chinese customers, but it's all digitized. And their ability to then apply higher quality data and a more digital experience to use things like AI and generative AI is just much greater. So I think some of the emerging economies, it's in some ways faster.
Mm-hmm. So, the other part, I think it is also true with any company with a global footprint, is the geopolitical risks, which introduce a lot more volatility. And I would love to hear how Invesco is managing those macro risks.
How much time do we? Carefully is the short answer. Look, we have to look at them both as a corporate, from a company standpoint, but we also look at them from an investment standpoint. I think the number one word used on earnings calls was generative AI in the last 18 months, and second was geopolitics. So it's clearly on people's minds, and they're trained to talk about it. The geopolitics stuff, as investors, it's been part of the decision-making process for as long as we've been managing money. So what are the macro factors that are going on, whether it's political or economic, and what's then driving the impact on businesses that we're investing in? So as I talk to our fund managers, it's more complicated today, but the tools and the ways that they have to think about it are no different. And in some ways, it elevates their craft because they've got to sort through all of this. And back to my volatility point, it creates opportunity. As a business, I think it's different. It's pretty different because as a global and an international company, I think we've been operating up until the last 5-10 years, and now even more in the last 2-3 years, as this very open global environment. And most everything could move around. And we've designed a company, we're a services business, but think of it as if it weren't a services business. Our supply chain of investment content and delivering it in a vehicle, a package in a way that investors can use and engage with clients has been built on a global network. And now you have to rethink that as a services company, and you can't just turn on and turn off the manufacturing line. And that's more complicated. That's harder, but I don't think it's changing. It's not changing our conviction about the markets we're in, but it's making working across the world much harder.
So one of the things that we advertised to the conference attendees here was that we will ask you to identify some real great opportunities in AI subsectors that we should be investing in.
Oh boy. No, thank you. I have to read my disclosures before I do that.
All right. So let me ask you a different question in that case. And say, take us 10 years from now.
Yeah.
And, how will AI change the way we will invest? And is there an issue that the individual investors using AI may be so smart that they may not be needing the financial services?
So we'll see. I'll get specific on that in a second. One of the things I find fascinating, I try to remind my colleagues all the time, as much as we like talking about investing, I think lots of surveys that have come out and they rank from 1 to 50 things that people like to do. And the bottom of it is planning your funeral, going to the dentist, pardon me if anybody's dentist. And then thinking about my money is down there. So this idea that do it yourself, and even with the tools are there, there's lots of us probably here that love it. But a lot of people want advice along the way. And I think it's being continued to be proven out that the more and more tools we have, we can be a better part of that process as individuals, but you want to turn to somebody, especially in points of stress, whatever those stress points are. So I think that's going to continue into the future. I just think the tools through technology are going to get better at making us better consumers, like it has with everything else. And I think that's the course of action. I think and it's going to make asset managers better at connecting with clients and what their needs are, because we're going to understand their needs better through technology and things like AI. I think my comment before about making private assets more public and the tokenization things, I don't know how that's going to play itself out, but there's an intersection between the two. And so I do think the future is going to be different about access to investments by everybody. And personalization of creating portfolios, you probably aren't going to be relying on a mutual fund or an ETF in the end. You're going to have a personalized portfolio based on what your needs are rather than a pool of portfolio. As a mutual fund and ETF manager, we'll cannibalize ourselves over time. I hope that happens in the next few years, but I could see a future decades from now where it is.
So, Andrew, in a conference like this, part of the ability to convene such a conference is to really also pose some questions for our researchers as to what might be the burning question that from your lens as a CEO in the field of AI and the future of finance that you would like the academic world to be exploring further, perhaps in partnership with the industry.
So I'll mention two. The first one maybe is half funny, but I'll try it anyway. if you can help us get better returns and more alpha in the portfolios through any
on you for that.
anywhere, if your technology can help us do that and all the different AI tools, I'll put that challenge out to everybody. Our doors are wide open to hear your ideas about how to improve performance, and I do mean that seriously, but half joking. Look, I don't mean to be redundant, but I really would pose that question about tokenization, about private assets. It's a big question, and digital assets. The whole notion of a distributed ledger, the whole notion of democratizing investments and finance, and creating a personalized experience for anybody, I think is really important. And most people, if you have a retirement plan, defined benefit plan, which most people don't have anymore, a pension fund, you have some access to these things through the people looking after it for you. But if you don't have those things, and you don't have access to that, and so technology will help, I think, that process, and it's a big challenge, and I think it needs big minds against it.
Great. So in a couple of minutes, I would love to take some questions from the audience, if you don't mind.
Of course.
There is a mic on this side and a mic on this side. So if I see people stand there, then I'll know that people have some questions that they would like to ask. Otherwise, I'll continue going myself. So I'm going to turn a little bit to the concept of leadership. You're a CEO. And I want to ask you, and I ask this for most guests, because I think every time I pick up on something new, what are the prime responsibilities of a leader in your mind? And does it change from industry to industry or organization to organization?
I'm certain it changes like I said at the beginning, I know this industry and I know this organization, and I have lots of peers. So I'm certain it's different. But I think one thing that's universal is, and I think it's unique to the CEO role, but I think it's true across a lot of different leaders. You have a lot of stakeholders, and keeping all of your stakeholders in balance, because, they're all important. I'm not going to try to rank them. And when the more responsibility you get, and sitting in a CEO seat, you have to balance all those stakeholders, your clients, your employees, the community, your investors, and you have to make choices that are in all their interests. But sometimes those are, they're not always completely in concert. And I think good leaders are really aware of that, and they spend a lot of time with each of those and finding the balance. And then I mentioned empathy before. I just think it's the most important trait of a leader, is somebody that listens well, and somebody that can think about someone else's situation.
Great. So it seems like they don't want me to be asking questions because of the lineup of people here.
I've been started. Here's my answers.
So if you can just quickly introduce yourself very briefly and ask a quick question, and please try to restrict it to one so that we can get as many people as we can guess. Yeah, please go ahead.
Yeah. First of all, I'd like to thank you that you came here. I find your talk it's really interesting. My name's Sishan Chanduri. I'm a first year at Georgia Tech. My question really was, I felt like the part where you guys talked about market volatility, all that stuff was really interesting. I was kind of wondering if you could elaborate, like, because right now the market is like really volatile. Nobody knows what's going to happen. Do you have any predictions on what we can expect in the future? And if the economy is actually going to go into a slowdown, or are we going to have, is it going to bounce back like it did in COVID? Like, what do we project?
Yeah. The market will always come back. So, don't bet against it in the long run, and try to take a very long-term view. Questionable whether we'll end up in a mild recession or not. And, we don't have enough time to talk about probably all those details. When I was talking about volatility before, when you don't have volatility in markets, you don't want this much volatility, but when you don't have volatility in markets, everything's correlated the same direction. It's really hard to differentiate yourself and really make money. And that's what I was getting at. And the last several years, if you weren't invested in the US and you weren't invested in hyper growth, large cap, and probably 10 stocks, your portfolio returns looked a lot different. And that's not healthy for markets.
Right. This side.
Good afternoon. Robert Ed. I'm a retired military contract officer and soon to be graduate student here in the fall of Schiller School of Business. My question is, what do you think will be the um, aftermath of having the implementation of a digital currency in the investment field? First question. Second question is, what do you feel might be some of the issues behind having AI human teaming in a financial industry?
Yeah. I look forward to actually having I don't know what the right word is, a bot, an AI human next to our human employees. So I really am looking forward to it. And I think it's going to happen sooner than later. And I think it's kind of happening already, and we don't just call it that. So I think that's going to be a big development. On your first question, look, whether you believe in digital assets, whether you own Bitcoin, like I said, the technology behind it is pretty powerful. I think one of the things less talked about that could be a limitation, despite what we're hearing from the administration today, there's a lot of sovereign currencies out there. And where does this sit in against those sovereign currencies? And as people have thought about that, so I'd pay attention to that as well.
Okay. Thank you.
Great.
Hey, I'm Sharia. I'm a fourth year studying finance. I was curious as to what advice you would have for people early in their careers. One of the pieces of advice that I've received is that the principles you set and like the habits that you practice are going to compound on later on in our careers. And we're also from like a different generation where we're very fluid with the jobs that we have. But I did notice that you stayed at Invesco for a long time. So like, what sort of internal systems did you set up to go from global corporate dev to all the way to president CEO? And really, those internal systems are based on principles and habits. So if you could discuss that a little bit.
Yeah, I mean, there were great leaders at Invesco that were at the beginning when I joined the company. And so one thing I'd say is when you're joining a company, think about the company you're joining and is it a culture that aligns with your beliefs and your thinking. And Invesco for me was that. And cultures evolve, and the culture at Invesco evolved, but its principles pretty much stayed the same. And I like to talk about my career there. And why I'd encourage people to not think you have to jump around to be successful is that I had so many different careers inside one company. I mean, I probably in the 25 years, I can think of 7 different careers I've had. And they weren't in the same part of the company or the same geography of the company. And that's how I navigated it. But you can also do that and stay in one area. You like investments but it gives you an opportunity to really cut across. And so I just encourage people to think about joining a company that is looking for people to do that and that also has a culture that aligns with your beliefs.
Thank you.
Thank you. Andrew, thank you for being here today. My name is John Medich. I'm a Georgia Tech QCF alum and current quant trader.
Oh, great.
I would like to talk about active portfolio management marketed towards individual investors, particularly non-traditional asset classes. You mentioned private markets, real estate, commodities is another one of interest to me.
Yeah.
Can you talk about the past 10 years and how that has evolved? And what do you see in the future? And what is Invesco's role in marketing that towards private investors via active management?
Yeah, it's great. I think the public markets have become very, very skewed towards passive investing, sitting alongside active investing. And some believe it's disrupted the capital markets. On the public side, we're investors in both sides. So it's not that I don't have an opinion on that debate, but I think both are relevant in people's portfolio. The private markets are all active. And so I think it's an exciting space where you can add a lot of value, like I'm sure, you all are doing in the strategies we're talking about. But my point earlier, if only a small set of people have access to it, we're not going to get the benefits of it. I think the one thing to pay attention to, because the fastest growing part of private markets in the last 5 years, maybe 10 years, has been private credit. And that's basically, lending directly to companies and to projects from something that's not a bank. And you should ask Bill Rogers about this tomorrow. I'm sure at Truist I'll have an opinion on it. But because of the way banks had to hold so much capital and it was much more difficult for them to give loans, private markets replaced that. And I think there's some health in that, but I think it's also, we need to get back to a place where banks are lending again too. So I would just say over the next 10 years, private markets into individual portfolios across credit, real estate, equity, commodities are already there a bit and a little more publicly traded, is going to continue to increase.
Very nice. Thank you.
Yep.
Thank you.
Hey, Andrew. Thanks for coming out today and sharing your insights. I'm Kritik. I'm a fourth-year CS major here. So I was wondering, with all of these AI agents and all of these new workflows coming out, I know a lot of other industries, especially like full technology or even other industries, are really affected by it. A lot of roles being taken away. To what extent do you see that happening in finance, like those workflows and those roles?
I think it's going to happen. I think my comments before, I was talking about asset management, but I'd say any regulated industry, it's not going to be so straightforward for the reasons I said, and they're going to be careful. But I think it's going to coexist. I mean, I'm a believer it's all coexistence. And so I'm also a believer that all of us are going to continue to have a role to play. And so I don't see that this becoming there's no jobs left for the rest of us. I just think we're going to advance to the next level. So I do think it's going to happen in finance. I just think it's going to happen slower in finance and other areas.
Got it. Thank you for your time.
Thank you.
My name is Alex, and building on the second previous question, your latest CEO insights, and also today you've talked about increasing access to private markets.
Yes.
I was wondering more of like, what challenges do you see in going about this, and why you think it hasn't been done to a broader degree before?
Liquidity. I mean, public markets, we can see them every day and you can get your money back. And in private markets, you give up some of that liquidity. And so the problem herein lies the problem. But the challenge that I was putting forward was, how do we make some of these things a little more liquid, like tokenizing this building so you can own a share as opposed to the whole property?
Thank you.
Welcome.
Hi, thank you all for this again. My name is Arnav. I'm in my fourth year studying industrial engineering and mathematics. During the discussion on tokenization, a topic was brought up that I'm quite passionate about, which is democratizing finance. While we can see currently tangible ways of doing this, for instance, access to financial literacy or public products such as ETFs, this notion of democratizing doesn't sort of have an upper bound. What I mean by that is, making credit default swaps accessible to everyone, that counts as democratizing. Of course, that's an extreme example. But my question is, moreover, what to you at Invesco is this idea of democratizing finance? And moreover, how is Invesco, I guess, tangibly making that happen?
It's such a great question. And you answered part of it in the question. Financial literacy, amen. And I hope there's some financial advisors here. I mean, it starts with the financial advisors or the consultants and people, making sure everybody that's talking about private markets has that same level of literacy, let alone all the individuals that they're taking it to. That is one of the big inertia points of getting private markets into the hands of investors. Liquidity is the most technical one, but maybe the most practical one is education. And we've got a long way to go. So thank you.
Great.
Hi, thank you for the talk. My name is Zephyr and I'm a third-year CS major. My question was, you mentioned geopolitics as one of the factors that you take into consideration while managing assets. As someone in academia who's trying to, let's say, if someone were to model this sort of thing, it's very complex. It's a very complex task. And I don't think anyone's done it successfully in perfection. What would be a good starting point? And what other factors would you consider when you're talking about geopolitics as a broader term to at least understand like markets and volatility?
That's a very hard question, especially given your background. I have a feeling you might know the answer better than I do. So we should talk later. But I mean, look, not to be too cynical, I don't know a period that's like this. And so being able to model off of past data points is pretty hard for me to calculate. Maybe you've figured it out, but I think that's hard, is like what period to look at to try to model some of these off of. And then you've got some rational actors, some less rational actors, which is making it highly complicated. On the other hand, there's a lot more transparency about things that are going on today than there were in past decades, which I think creates the opportunity. But I guess maybe the one thing I'd say as it relates to investing, I think it's going to be pretty hard to make a case for politics and geopolitics being the only factor you look at. You have to look at it side by side with normal economic and macro factors, and then very specific company factors and how they're impacted. So it's so multidimensional. But I'm sure they keep working on it because I think there's a huge need. As I said, geopolitics was the first or second most talked about comment by corporate CEOs.
Thank you. Let's take the last three questions from this side.
Hi, thanks so much for the talk today. I'm Anand. I'm a second-year CS major from Stanford. I know the topic of tokenization has been kind of asked a lot, but I had one question. So I read about a recent Apollo private credit fund, tokenized private credit fund, launched in January, and I was wondering how you guys were thinking about that in terms of solving like the liquidity issue, because that's kind of meant to address that.
Yeah. I mean, that right now with some of the technology that's out there and some of the investment content, which is why I put the problem forward, we can't fully solve it. And so you build in things that give up some of the investment returns or maybe dampen some of the things you're trying to accomplish in the fund. So you pair it off with more liquid loans, that are semi-public. You pair it off with some treasuries. So you create these sort of these boundaries, lines of credit to deal with them. But I don't know the specifics behind exactly what Apollo is doing, but it'll be things like that, which are all great. I mean, they're semi taking a solution to the challenge, but they're not fully there.
Thank you.
Hi, lovely to meet you. My name is Chelsea. I'm a first-year student at Duke University studying statistical science. I wanted to ask a little bit more of a humane question. As a CEO or as a person in general, I wanted to know what's your biggest critique of AI and how you think it'll be handled in the future.
That's a great one. I'm not sure it's a critique. Maybe it's more a worry. That how powerful the tools are, that we all know how to engage with them. And I think if you're learning, my teenagers are going to be better equipped, all of you are going to be better equipped, that are students or that are experts. But I'm not sure how equipped everybody else is. And so.
You mean like in hard skills, or do you mean ethically?
I don't know about ethically as much as, just how to work through the flow and make sure you know the input and the output. So I don't think it's the technical side. I think it's, or the ethical side. I think it's ignorance, naive, whatever word you want to use.
Oh, I definitely agree with you. Thank you so much.
Yeah.
Appreciate it.
Well, it's your turn because those were this side first. Then final question you will get.
Thank you very much for the talk. I'm Araf, a PhD and MBA student here at Tech. My question is, you talked a lot about AI and how you guys are considering making your workflow better and how utilizing it may help you guys do better investing and just run the company better. My question is, who would you hire knowing that AI will change everything in next 1-2 years? Someone you hire today will work for you for 2 to 5 years, maybe 10 years after this. Now in 2 days, who would you hire? And has your hiring qualification checklist changed over the past time frame that you think?
Clearly a tech student. And definitely. It would be point one.
Answer.
Yeah, exactly. Point one. I think point two, I mean, look, I'm just thinking about how impressive all your questions have been, and I'm like, whew, I'm getting through this. But it has changed. And I think when I, was getting hired into a company like Invesco, for any job, coding wasn't a requirement or even a thought, or even basic coding. I'm not talking about full engineering coding. Analytical skills were, but it was different. And people came prepared, and I'm not going to say that we weren't prepared in, my generation when we came in, but you're at a different level of prepared. And so I think when we're hiring people, the standard definitely has gone up. And beyond just being analytical, being technically proficient, whatever job you're in is kind of a requirement too. And that wouldn't have been true 20 years ago. And I'm not even sure 10 years ago. But I think it's also important, not just the hard skills that people have, maybe what's gotten equally as the bar's gone up is the soft skills. And so I think people that can bring the hard skills and the soft skills together, whether that's writing or communicating, or some of the things I mentioned before about engagement and empathy, are important too. And so that's probably how we look at it, a full rounded package. But it's competitive, but just listening to your questions today, I know everybody here is really well equipped.
Great. All right. Final question.
Andrew, I think you'll really like this question. I'm Rajat, a current QCF student. I want to know, how does your day look like, and how do you make sure that you're sharp throughout the day to make the best decisions, and the decisions that are super critical?
Right.
And what really motivates you every day to get up and work very hard?
Yeah. Coffee, definitely. The occasional workout, and I mean that seriously, like getting away from, take a walk, even if it's not getting a workout in. So those sort of things. Balance. I mean, I think I try to be present where I am all the time. And so if that's with family, present. If that's with work, present. If that's engaging with you, present. And I think I think that's important. Days are all different, so there's no routine. Probably more scheduled than you think. So, I think about my schedule out a year, and I'm then refining it through so you've got to be disciplined about your schedule. And back to what I was saying about stakeholder engagement, you got to constantly be thinking about, am I overspending here and underspending there? And so time management, things you kind of learn early on, but thinking about it in just a different way as CEO, you got to be disciplined with time management.
Well, Andrew, thank you very much.
Thank you
for spending time with us.
Thank you.
Great answer. Absolutely. And I couldn't get to most of my questions, so we'll have to have you back for those questions.
Well, you'll have to wait to hear the survey results.
All right.
Thank you. Thank you.
And I'm delighted to invite you tomorrow to another session of Tech Talks Business tomorrow morning. And if you are interested in that, please be here by 8:45 because doors will start closing sooner. And we will be joined by Bill Rogers, Chairman and Chief Executive Officer of Truist. We hope to see you then. Thank you again. See you.
Thank you.